Good afternoon, everyone. K Kim here, and it's about 12:45 p.m. Central Time. So we still have about 2 hours and a half, 2 hours and 20 minutes to go in the market. And I wanted to do a quick video update. I promise it's not going to be long. I know the market continues to tank today, but I thought it was interesting to note that we have Treasury bond tanking as well. So you can see where right now Treasury bond, ever since they bottomed back in late 2013, right about here with a double bottom, weekly bullish divergence, and that pattern was confirmed in this vicinity right about here. We had a little bit of pullback, created a higher low. Ever since then on the Treasury bond, what really happened was, and this is the reason why this is important, because usually when market or the Treasury bond get into a trend like this, strong uptrend like this, market rolls over. And when Treasury bond gets to this kind of a run, and then Treasury bond starts to roll back over, market tends to bottom. But recently we're not seeing that. What we're seeing, well, let me just say this first. Ever since it bottomed back in October 2013 here, with a confirmation right about here about late March of 2014, we continue to cultivate higher lows and higher highs, right? As long as we continue to cultivate higher lows, higher highs, we're in an uptrend, right? And we closed on the Treasury bond, we rolled that all the way. We closed all of our positions up here. And then this is the first time since the bottoming pattern back in late 2013 that we have cultivated lower high. And again, lower high itself is not enough when we're working with this kind of a steep uptrend. We need lower low to fulfill that definition of a downtrend, right? So now with this recent move today, despite with the market weakness on the S&P 500 and other major indices, you can see that Treasury bond continue to tank here. And so what I'm trying to figure out, and obviously we'll know about this later on, how it's going to resolve itself. But we have lower lows and lower highs. What is this? We are cultivating downtrend on the Treasury bond, 20 years Treasury bond. And this is significant when we are looking at, right, the Treasury bond versus the S&P 500. Obviously, it was interesting to note that many times when Treasury bond starts to go up, it is usually a major topping pattern on the S&P 500. Same thing happened here. Treasury went up. That was the flash crash back in 2011. And ever since then, we pretty much kind of starting to move up with the Treasury bond. And right about here, when Treasury bond started to move up, you can see that S&P 500 moved along with that. So that we start to see some kind of a deviation from its normal reactionary price action from what was happening in the Treasury. So basically, the equity market completely ignored what was happening in the bond market, right? What I wanted to see here is that you can see that the red is Treasury bond and the blue is the S&P 500. So when Treasury bond rolls over, right? And this one's more like it because it has cultivated lower high here and lower low. So it was kind of a downtrend. So the red marks is when I marked it, what happens when the Treasury bond rolls over? What happens to the equities? Does this mean that just because Treasury bond is rolling over, because then equity is gonna, continue higher? Treasury bond comes lower, equities higher. We've seen that this equation can work. It did work in the past, but it may not here, because obviously when Treasury, when the S&P 500 went up, it went up along with the Treasury bond since late 2013, which we have not seen in the past. So I cannot conclude that just because Treasury bond is rolling over, that the S&P 500 is going higher. But as far as history is concerned, that's what happened. You can see that right here. Oops. You can see that Treasury bond rolls over, and that was when the S&P 500 thrusted higher. Same thing happened here, lower high, lower low, rolls over. We had a bit of pullback here, but it's interesting to note that it pulled back when Treasury bond, let's see here. Actually, for a little bit, they came down a little bit together, but then big picture wise, when Treasury bond started to roll in over, this thing went higher. Right? And then it was faithfully obeying that uptrend support at the same time, right? So we're still in an uptrend. So, it's more important to kind of look at a big picture, the trend-wise, rather than very minor term. So you can see that they come down, they go up. Same thing happened here. I mean, this was just huge jump. That was a huge launch, and then it crashed quickly. Well, at the same time, market reversed at the same time, right? Actually, Treasury bond started coming down first before market did. But again, there will be some lag. We cannot, always perceive what's going to happen. That's why, it's just looking at the bigger pictures better. It helps because it's very difficult to forecast a minor term using these kind of overlaying charts here. Kind of same thing happened here with a lower high. This was back in 2010, late 2010. You can see September, August here, lower high on the Treasury bond, and then market moved higher. But we have to note that when Treasury bond did go up, market did fall back then. Same thing happened, let's see here, Treasury bond rolling, we had a lower high and lower low, rolling over. Look at the market, how well it did that back then. And I can account for this one here because, well, this one, we do have slight lower high, but we do not have a lower low. You can see that we have equal lows. So that was a support. And then Treasury bond went higher. The difference here was we don't have a support, we have lower low. So that we cannot, analyze what they were compared with that. So when I analyze this, as far as history is concerned, as far as the probability is concerned, you can see that when Treasury bond, starts to roll over, starts to cultivate the lower low and lower high, starts to get into a downtrend, S&P 500 tends to go up with it. It's difficult to say that if that's going to happen today, for the fact that S&P 500 pretty much ignored what was happening in Treasury bond and kind of moved together. And it is also interesting to see that with the recent weakness, the Treasury bond didn't go higher. But I thought I'll mention that real quick and let you guys know. And this is another one. This is S&P 500 versus Treasury yield 10 years. This was a topping pattern and topping with the Treasury yield. You can see right here and right there, right on that resistance. The difference is if that was what's gonna happen, like here and here, this would have been where the market was gonna roll over. Market decided to ignore that, continue higher, and Treasury bond came down a little bit. Actually, it came down a lot, but we're kind of finding support here, kind of similar to back in 1996 when I kind of studied the whole chart here. What happened in 1996 is, you see that right there, Treasury yield rolled over, but market kind of, moved sideways a little bit. And once Treasury yield started to move upside, then the market resumed, and look at that move ever since then. And again, just because that happened back then, does it mean that that's what's gonna happen here? No, this is where I'm trying to ascertain where the where the market is gonna go, and then when I go through these tabs, the 11 tabs that I have, right? And I kind of go through them. And I go through these also as well. S&P 500, VIX slightly making higher lows, and that's a concerning factor here. But you can see it's not very, very vivid higher lows. Well established high low like this. You can see that when VIX starting to put higher lows, S&P 500 VIX, and then S&P 500 also put in higher low. That was a topping pattern. Obviously, when VIX get into an uptrend, that's a problem, right? VIX getting an uptrend, VIX is going completely opposite to, they're gonna have a inverse relationship to S&P 500 very, very directly. So this was a huge warning signal, right? And so this right here, slightly higher lows. I wouldn't put too much weight on it because we had something similar back then, right here, a little bit. I don't know if I would call it a higher low, but slightly. We weren't making lower low, But if we look at kind of big picture, you can see that they're lows, lower lows, and then this low is still a lower low here. You can see right there, that's still a lower low compared to where we kind of came down hard and then we starting to going up hard. So I can't say just because we have that, hey, market is going to roll over. I can't say that yet, but hey, that's a bit of concern. Let's go to Russell 2000 Russell 2000 volatility index versus Russell 2000. Well, you can see that we were cultivating higher lows here, and then we made a new low. So you can see this is no concern on the Russell 2000. You can see that back in 2007, look at these higher lows on the Russell 2000 volatility index. And obviously, that was that was endorsing, condoning what was happening on the VIX and S&P 500, right? Let's go to NASDAQ volatility and NASDAQ composite index. Obviously, this is in higher low. This is lower low. If anything, kind of straight line. So if we just look at a big picture, lows, lower lows, no big problem there. Problem was back in 2007 all the way is that we started, again, this was a big picture. Just because we created that higher low, is that did the market crash? No, it continued higher until, it took, since that, it took another 3 years to the upside, but then we cultivate a big major primary higher lows, and that was a warning signal there. But again, market didn't crash until 2000, NASDAQ didn't crash until 2007. But the signal signal was there in 2007. So end of the year, 2007, 2008 started cultivating. So once we got that higher low, that was concerning factor, right? So we looked at all of this. We looked at the S&P 500 versus yield, which looks possibly is a positive sign. We looked at the Treasury bond S&P 500. Looks like it's again, market is gonna do what it's gonna do. All we have is a probability. So I'm trying to ascertain that. Obviously, as far as the price action is concerned, I still stay bullish in the primary to intermediate. The minor term or bearish with today's action. If we had a bullish action today, minor term would continue to be bullish. However, with the right now recent price action on the S&P 500, we are minor term bearish with just recent current tankage right here. So we are still right on that Fibonacci retracements. I'll come back to it before I end this video, but let me finish let me wrap up here with this. So TNX possibly giving us again, sometimes we have to look at a big picture, and we cannot be swept away by minor term fluctuations, because that's what this market loves to do, stir emotions and impute fear, heap upon condemnation without substances. So again, with the Treasury bond, S&P 500 Treasury bond completely rolling over. Historically, that's a good sign for the equities. But then, in a minor term, we haven't seen that yet. So we have to kind of give it some more time if that happens. S&P 500 a little bit of higher low, but as we've seen other volatility indexes, which we're gonna go look at to wrap this up. We're not really condoning that. I mean, this right there, obviously much bigger higher low than this. I mean, we've seen similar higher low up here, and that really didn't amount to nothing then, because this was kind of back here where this thing continues. So you look at this and say, oh my god, that's a warning signal. And if you look at this, we're actually still kind of in the territory of lower lows at the same time. So that's not a huge signal. That's clearly a higher lows. So that's not a huge signal there. Obviously, Russell 2000 volatility index is not, we're just kind of, we have created that we're not in a danger signal where this thing is cultivating high low like that, like it did back here in 2007. That was a warning signal right here. So we don't have the warning signal on the Russell 2000. And obviously, looking at NASDAQ volatility index, we are kind of making lower lows completely different than higher lows back here. So that's also not warning signal. So what I do is that we see certain weakness recently, and I'm trying in a minor term, there's a lot of uncertainty in the market. We get that strength in the dollar, recent social media stocks tankage. Still there's a lot of fear in the overall market. The Fed's possibly raising interest rate end of the year. I mean, all that stuff kind of goes with it. But what is something that we have to keep in mind? The price action, because all that uncertainty was in the past as well. There was uncertainty here, there was uncertainty there. Obviously, there was some kind of that was back in Ebola, panic. There was uncertainty back here, obviously. So right now, it's as far as today's action is concerned, we are now minor term bearish, because now we have broken above or below this recent higher lows. So we're minor term bearish as of today until we gap back above at least 211. Again, below 212.29, I believe the volatility it is going to continue. Let's check intermediate term though. Intermediate term, that's higher low. The higher low down here, this is a higher low, which means we are still in the box, right? We're still in the box. What does that mean? As long as we're above 205 on the S&P 500, it is still considered bullish in the intermediate term. So obviously, I don't know if you're going to break our FRZ here. It's going to be a bit concerning if it does break below that. And so, but again, we don't have that data today. I'll worry about it tomorrow. We do have this rising uptrend channel going here. We're just sitting right on that along with the FRZ right there. So that's a strong support. A lot of buyers have showed up at that vicinity, right? So I wanted to give you this quick update, trying to ascertain, looking at the Treasury yield, Treasury bond, and also the VIX's volatility index on S&P 500, volatility index on NASDAQ, volatility index on Russell. So along in big picture, we still don't have major topping pattern as of today. We still don't have major topping signal. Look at the S&P. I'll end the video with this. S&P 500 versus financial sector. You can see that higher highs on the S&P 500, lower high on the financial sector in a primary term. Same thing happened back here in 2007-11 crash. Starting to put on higher high, lower high is a problem. The question is right here, we do not have a higher high. What we have is an equal highs, and pretty much, I mean, we can't really call that a lower high yet because we're still cultivating higher lows on the financial. So they are not diverging, and we are not seeing a topping pattern. So as far, that's what I was trying to do. Is there, a big picture warning signals? As of today, no, we do not. Is there major topping pattern as of today? As of today, we do not. Do we have minor term concerns? Do we have, there's certain fear? Yes, there is fear. There is uncertainty. But minor term though, when I say minor term, I mean, we're talking about some of this here. Intermediate term, are we still in an uptrend? Yes, higher lows, higher highs. Is there any indication signals that they're possibly support the market topping out? We've been seeing extended signals on this market last 2 years, so that is not relevant at this point, that this mark is the indicator oscillator saying we're overbought. That's not relevant because they're looking at a big picture. Obviously, we've seen that happen in the last few years and it continued on. And you could say, well, because we've been going continue in the last 2 years, does that tell us that this might be the top? No, we don't. Well, nobody knows. It could be, but nobody knows until we get a topping pattern, right? We don't have that. We don't have a price action topping pattern. And you might ask me, what's a price action topping pattern? Well, a lot of times, that could happen. That takes about 6 months to form. And if you ask me what might look like, hey, that the topping pattern, well, if we see something like this, right? That would be the topping pattern. We'll have a huge left, huge higher highs that turns into lower highs. This could be the initial kind of a smaller scale of head and shoulder, and we'll have a big scale of head and shoulder. A lot of times when there's a market crash, you will see a smaller scale of head and shoulder, and then there's a wider scale of head and shoulder. So, we need to see price action. Not only this thing do this, go up and break below that, it's going to probably want to retest it and then come back down and then get. So, for that to happen, there's going to be a lot of time. So once this thing gets, the major warning signal might be that this thing comes down here and that again, but this scenario that I did to you guys, if you've been with me long enough, I gave you a scenario back here when I was doing, I don't know if you guys remember, if you guys have been with me since 2014 April, I said, what's the topping pattern, K? Well, it has to come down here, come back to this level, and then it must go up and then come back down. Not only that, you have to break these supports and confirm it, get up, retest as a new resistance, and then roll over, and that will be a major topping pattern. Well, we never seen that. And then here, what will be a major topping pattern here? Well, this would have to come down here and make the equal lows, and then it has to come up here and then roll over. Well, we never saw that back then, and come back here. Well, what is a major topping pattern? It can't have to come down here, it have to come equal lows, and then it has to go up, and then you have to come back down, and then we'll have a topping pattern. Well, we never saw that there either. So are we gonna see that happening here? That's what I'm saying. I don't know. I don't think it will at this. We don't have evidence of that. We still have to give benefit of doubt to the buyers as long as we're above 100 SMA in the intermediate term. So let's see what happens. We got two more. We got rest of the day today. I think it's gonna stay over here unless there's some kind of buy frenzy later on, but it looks like we're just gonna stay like this. And we're right on the uptrend support and that Fibonacci, the last level. So let's see how we react to that level. If we can kind of hold here for about a few days or so like this, and maybe see something like that, kind of a hold for a few days like this, and then Monday, bam, that might be possible as well. So I'll look at it 2 more days this week, and then Friday we'll have the weekend video that, so let's give benefit of doubt to the buyers in the intermediate term. And I suggest not to look at the look at the market, just kind of look at it at the end of the day and see what happens. And let's see if this level can hold next few days, right? And then we'll talk this weekend on a weekend webinar video. Have a good day, enjoy your day, and we'll talk soon.